What's up, everybody? Today we're going to be discussing one of the most talked about stocks in the entire market. It is a favorite, especially among retail investors. It is Palantir. Now, Palantir stock has just been on an absolute tear the past few years. You can just tell from my little price graph here that it's up to about $150. And just a few years ago, it was sitting under $7. Now, I don't own any Palantir stock. The first time I did a deep dive into this company, it was almost a year ago, and the stock was sitting right around $40 a share. I determined at that time that I thought Palantir was probably fairly valued. In my bull case, I had Palantir stock tripling over the next 5 years, and it's basically done a little bit more than that in just a year. So I've been wrong on this stock, but there's always going to be thousands of stocks that we don't invest in that are going to go up in price. All we can do today is look at Palantir at this price and decide, do we think the risk reward is good right now? Now, first of all, you're probably wondering, what does Palantir do? In fact, I think a lot of people who are invested in Palantir even wonder, what does Palantir do? Because it's not so simple. Palantir is a software company. Their clients are either government organizations or businesses. They are not individual people. And to put it simply, what most of their software does is take large data sets as inputs and allows their clients to make decisions. So their largest customer by far is the US government, and they might use Palantir for everything from, integrating battlefield intelligence along with maybe the movements of enemies. And then you're incorporating all that data to make real-time decisions. If you go to their blog, you can dive more into specific use cases. This one is really cool, talking about drone navigation. They were trying to solve the problem of operating drones in an area where maybe GPS is blocked, and you also don't want to use radio frequencies to operate the drone because, first of all, that's not as secure, and also it might give away the location of the person who's operating the radio. So they developed a visual navigation system they call VNav that allows them to fly these drones without GPS or radio. Basically, they uploaded a whole bunch of satellite images of the surrounding terrain into the drone, and then the camera in the drone is always scanning the ground and then matching what it sees with its library of satellite images. This allows the drone to essentially fly itself. It's able to navigate without getting off course. There's a whole bunch of super cool examples of use cases of Palantir's technology in here. And recently, Palantir has been trying to expand to commercial clients. In their last quarter, close to half, about 45% of their revenue came from commercial clients, so non-government, and 55% came from government clients. And there's all sorts of different use cases in the commercial sector. Palantir is like a software solution to business optimization. It's kind of like a consulting company on steroids. So, for example, Airbus is one of their clients, and Airbus uses Palantir Foundry to integrate, all the manufacturing information and the logistics. So this part has to come from there. This team is working out of here, and they do this on an aircraft. And Palantir brings all that data and information together and can generate an aircraft production timeline that is streamlined and optimized. And if we look at their most recent earnings report, it is clear that the demand for their software has been incredibly strong. 39% year-over-year growth on the top line, and they've raised their full year guidance to 36% growth on the top line. These are incredible numbers. Just to put this in context, they had been growing 24% on the top line in 2022, 17% 2023, 29% 2024. Typically what you see is that as a company gets bigger, as the revenue goes up, the growth tends to slow down. That makes sense. It's harder for a bigger company to grow at the same rate. But Palantir, it looked like growth was slowing down from the 40s down all the way to the mid-teens. But now they're re-accelerating. They've definitely outperformed certainly all of my expectations, but I think even their expectations. These growth numbers are coming in above the top end of their previous guidance range. And while they're increasing revenue, they're also improving their margins. This most recent quarter, GAAP operating income margin was 20%, which compared to where they have been, you see that their operating margin has just been trending up. They flipped into profitability a couple years ago. They have a 13% operating margin over the past year. So this is excellent to see. And as you know, a company that is increasing revenue while improving their margin, that is a sign of a dominant business. And diving into the financials, you can really see why the margins have just taken off. Over the past 4 years and change, revenue has about tripled. Meanwhile, the operating expenses really have not gone up that much. So as Palantir scales out, as this revenue goes up even further, I expect these margins to continue to increase. And speaking of the future, I think it's time we put in some assumptions for the next 5 years to see what we could expect for a return on our investment if we put our money in Palantir today. Now, I had my base case at 25% revenue growth for Palantir for 5 years. And even though that assumes they're going to triple their revenue and get to about $10 billion in sales by 2029, I actually think I might have been underestimating the potential of this company. I'm going to up this to 35%, which is in line with where their guidance is at for this fiscal year. Historically, they have outperformed their guidance, but maintaining this growth for 5 years is going to be pretty difficult, but possible for this company. I have their operating margin climbing to about 40%, which when the company scales out, I think is totally doable. Again, their margins have been climbing. Operating margin hit 20% for this quarter. By the way, I don't put a lot of weight into the company talking about adjusted operating margins because basically what they're doing is taking out the share-based compensation expense. And this is a real expense. They are giving out a massive amount of stock to their employees. As you see, $700 million in share-based compensation. That is a pretty huge number. In the future, I'd love to see this number come down and for them not to be diluting their shareholders as aggressively as they have been. And I gave them a multiple of 40 5 years from now, which is, kind of roughly in line with where Nvidia is now. This is definitely a premium valuation and reflects the fact that I think that Palantir is an excellent company. And as you see, if these assumptions come true, which are assumptions that are giving the company credit for its incredible prospects, I'm forecasting that we lose 7% every single year for the next 5 years on this investment. That's frankly a horrible result, and it reflects kind of what I see as the only problem with this company, which is the stock price. It's just way too high for me. I would like to own Palantir, but the fact is the price is nowhere close to what I want to pay. Now, if we were to see what assumptions we have to put in to justify a decent return from here, if I give the company 40% revenue growth for 5 years, it reaches 50% operating margin, which, this is incredible. There are very few companies in the S&P 500 that have a 50% operating margin. And if I give the company a 60 times multiple, now you are looking at about fair value today. These are the kind of assumptions you have to make, not to even get like an incredible return, just to get, 9% annualized for 5 years on your investment today. Now, this is certainly possible, but I'm not going to bet my money on this. And I imagine some critics of the way I'm looking at this here might say, you can't look just 5 years out. You have to look 10 years out. This stock is going to be the stock of the future. If you're just looking 5 years out, you won't see the value. And you may be right, but here's why I only model 5 years out. I used to run a small media production company in California, and if at any point of me doing that, if you asked me what my next 12 months of sales were going to be, I would have been able to give a range, but it would be difficult for me as the person running the company to give a definite answer. Asking me to predict my own sales growth 5 years into the future would have been extremely difficult. The fact of the matter is, even Alex Karp, the CEO of this company, cannot see the future. He doesn't know what the sales growth of Palantir is going to be like, 7 years from now. So if he can't predict that as the CEO, why would I, as an analyst, make some model that has, Palantir growing 30% from years 5 to 10? I could make the company look like a buy, but I would just be fooling myself with numbers. I would be putting numbers into a spreadsheet that I have no conviction over. If I can't see the value with a 5-year model, then I don't want to be in. And we haven't even really put numbers in for a bear case, but we don't have to. Just looking at this base case here, I can tell you that Palantir is just not going to be a stock for me. The risk reward is just not right. Again, everything other than the price is telling me that this is an excellent company. This is a high quality company. This is the type of company that I would actually love to own at the right price. I'm just not getting that price today, but if you disagree with anything I said in this video, let me know why down in the comments below. If you got value out of this video, hit that subscribe button. We are almost at 400 subscribers, so thank you to everyone who has watched, and I hope to see you in another video.